How much money do you need to have in your bank account before you start investing? Where should you invest your money? When should you invest your money? These are three common questions I get to hear almost all the time whenever I talk about wealth building and passive income. Hello guys, this is Wealthy Panda, and today I will help you answer each and every one of these questions. Now let's start with the most basic one. How much money do you need to have in your bank account before you start investing? And the answer from my personal recommendation is you need to have a minimum of 3 months emergency funds set aside. Now I have a reason why you need to have a minimum of 3 months living cost or living expenses set aside as an emergency fund. The reason for that is, as an investor, you will start putting your money in investment that takes time to provide you return. If you decided not to have any emergency fund or putting a very small amount of money and God forbid something happen, the first thing you're gonna try to tap in is your actual investment, and that's a bad idea. You need to have enough time in case you need to liquidate. Again, life is unpredictable. You never know when you need to, have a major expense coming in. It might be health operation, it might be, money related for family, etc. So having at least 3 months minimum living cost set aside will give you that peace of mind. Now, just because you need to have 3 months living cost, it doesn't mean you should put your money, under your bed or something, right? You need your money, even the emergency fund, to work for you. So you need to find a good FDIC bank that's insured by the government and that can give you at least good return of investment. Now here in America, most banks give a horrible return, especially with everything the feds are doing. This being said, I personally have a bank account that give you anything between 1 to 4% return of investment on yearly basis. If you have not seen that video, please check our information card where you are able to see that bank account and how can you open one. Now, if you are outside America, do some research and find a bank account that actually provide you a good return. Now, this is the first most important question. Again, if you want to have more than 3 months, that's, even better, right? On the long term, I'm hoping you have a lot of cash in your FDIC bank account where you actually make your money work for you. But again, it doesn't matter how good the bank is, the returns will never be huge enough as investment. So this is more of a foundation, okay? Now, before I go in and answer for you the 2 other questions, please take a moment and hit that like button. It helps our channel ton. So consider that, take a minute and hit that like button. Now, let's move on to answer the 2 other questions. Where should you invest your money and when? Now, to help you answer these 2 questions, I put together a small tool that you can actually use as a reference. So you can see this diagram, a pyramid diagram that you can actually see how much percentage your portfolio should have on the long term and how should you move from one type of investment to another. Now, I'm going to explain for you this diagram in a bit. First, you can see in the bottom, this is the cash money that you have in your bank account that should be still generating for your revenue. Again, I'm not gonna call this an investment. There's not really any risk putting your money in a bank that's guaranteed by the government, right? That's very important. You need to have that, and it need to be providing your return. Yes, the return are horrible, but at least your money is growing. It's not shrinking. This is very important. Now, once you have that foundation at the bottom, okay, the first place you need to start investing should be the stock market. Not real estate, not gold, not any other type of investment. I know a lot of people does that mistake. Once they want to invest, they try to go out and find new way to invest money. You need to tap the stock market for multiple reasons. Well, for a starter, the stock market have all the companies there that you can find there, whether it's banks, whether it is government institutes, whether it is private companies, they have one thing in common. They have to provide all their information publicly so you can see how well the company is doing, which is very important. If you are investing in a private real estate, if you are investing in gold, etc., you do not have as much information as you wish when you are trading in public companies. So this is one thing that is very important about the stock market. The other thing is, there is something for everybody. It doesn't matter if you are conservative investors, you can buy bonds. If you are more of balanced or more aggressive, you can find the stuff like stocks that match your own or align with your own goals. So this is also good. But the most important reason you want to start with the stock market or pretty much or bonds that are traded there is because the stock market is the easiest place for you to liquidate your asset if you need the cash. So if I buy bonds today, I buy stock today, and God forbid something happens that's really huge, exceed my emergency fund, I will need to liquidate money. Stocks are very easy to liquidate. I need one business day, I go and sell it. I'm not saying it's necessarily gonna be great, right? I can sell my assets and I can lose money. But at least if I need that liquidity, I do not have to be stuck and start worrying. If you have a house and God forbid something big happened next day, or you needed liquidity, okay? What you gonna do? Go in the street and start asking people to buy it? There's no guarantee you can sell the asset fast enough. These real estate agents, don't take their word for it, okay? It takes more than one night to sell it, okay? So I'm not saying any of these investments are bad. I'm just saying you need to go one step aside. So once you get used to the stock market, once you get used to the bond, this is when you start moving to the real estate. Now, ideally, you want the real estate, whatever money you are investing, you want 40% of it to be always in the stock market before we move to the real estate. Now, once you get the hang of the stock market, it's the time to move to real estate. And again, real estate is a great investment. Everybody should consider real estate. If you're going to invest in the real estate, here's what you want to target. You want to have eventually on the long term 30% of your money invested in real estate. But you also want to keep in mind that real estate are harder to liquidate. So the higher we go in this pyramid, it will be higher for you to liquidate, or less chance for you to liquidate. It will be more difficult. You will have higher return, but you will have a higher risk. So these are a few things that you need to associate always with your investment. Now, you can invest when we're talking about real estate. You can buy your own house rented out. I don't know, maybe you have a lot of money, you can buy a building, right? So the real estate, there's a lot of way for you to invest. Now, not everybody will want to invest in actual owning a house. You can invest in a private real estate, which we have reviewed a lot of the platform, and you guys can see them in the description. I will make sure every one of these categories, we have the places where you can invest money here in America in the description. So take your time and go through these. Now, once you get the hang of real estate, this is when you choose to move to other places. My recommendation, start looking at all types of alternative investments. There is investment peer-to-peer. You can invest in, small businesses. You can invest your money in inventory. You can invest your money in gold. You can invest in silver. There's so many alternative options, cryptocurrencies. So all of these are areas where you can actually put your money in and get good returns. So keep that in mind. This is the type of alternative investment that I'm talking about. And ideally, you don't want it to exceed 20% of your portfolio. You can, but my recommendation, keep it at that way. Yes, it's going to have much a stable return. It will be a good passive income. It will help you build wealth. But again, the risk is getting higher. And if you invest in a small business today, you cannot come tomorrow morning and say, by the way, I forgot, I want my money today, right? It doesn't work this way. So keep these stuff in mind. Now, the last section I want to highlight, and ideally I want you to keep 10% of your portfolio or money that's invested there, is the long shots. And when I say long shots, I'm talking about businesses that you can invest your money in today, and it would be very hard for you to liquidate, almost impossible. The chances of some of them to fail is very high, but if they come back home, they come with a lot of money. I'm talking about startups. Instead of, just imagine, if you invest in 10 startups, each one you give them $100, even if 9 of them fail, your return of investment in that one startup that's gonna make it, we're not talking about 10 or 100 times, we're talking about 1,000 times your investment, 5,000 times your investment. Imagine you invest $100 in one of these startups and it come back to you 10,000, $50,000, $100,000. This is the kind of return you can expect with the startups. Again, you can invest in movies, you can invest in games. These are more for long shots. I personally believe they are ideal. It's something that if you wanna have a portfolio that build wealth on the long term, you need to consider the long shots. Now, I hope you guys like this model, and I promise you, you will have a printable version. I will make it in the community section in our channel. So if you want to get that one, make sure you hit the subscribe button and the notification button. So once I have that published, you can just download the printable one. If you want to put it in your office or something, that can always be handy. I hope you guys find this video useful, and if you did, don't forget to hit the like button as well. Thank you guys, and stay tuned with Wealthy Panda.